Okay, folks, we are live. Happy Sunday. Excuse me. Happy Sunday. Hope everybody had an awesome weekend. The new trading week has begun. And what we're going to talk about tonight are some really interesting topics. First and foremost, of course, is always going to be the futures action. We'll give some commentary about where I believe the direction of the market is going to go. We're going to talk about economic data coming out this week. We're going to talk about earnings coming out this week. The headline topic going into the new trading week was the IMF's launch of the International Monetary Unit, also known as Unicorn. This is a new CBDC, central bank digital currency, and nobody knows who the owners are. We're going to go to that in a moment. We're going to talk about what de-dollarization might look like. You're seeing a lot of videos out there, a lot of naysay videos about the dollar's immediate demise. It's not going to happen. The dollar is still the most liquid currency out there. It's the deepest currency. It's not going anywhere fast. Will it weaken, drip, drip, drip over the course of time and ultimately break? Sure. That probably not going to be for several years now. So that doesn't mean there won't be rallies and corrections. But yes, right now the dollar is looking as though it has entered a bear market. So let's go to comments and then we'll start off with the futures as we allow the futures to settle down here. Franklin, brother, yes, new trading week has begun. Jody, welcome, Jody. And Mr. Tim, I had a very good weekend. Thank you, sir. Brought the dog to the beach. Relaxing day today, and it was a lot of fun. Jeff, hello, sir. Okay, let's get to it. So we have the futures market that is open. I'm beginning to lose my voice, so my apologies if I keep drinking water. Trader Isaac, we'll take a look at it. I haven't looked at that one in quite a while. STNE. Okay. So we have the NASDAQ futures, which are open. They are up fractionally. They were higher. You're seeing a red candlestick because this measures the opening price action relative to the closing price action. We were higher. We are now lower. That's the proximate cause of the red candlestick. It's not relative to the close of Friday. So let not your heart be troubled. We are up on the session relative to Friday. The Russell 2000 up a quarter percentage point. We were higher. I think that this is going to higher. Nice little stair step action going on in the Russell 2000. I think that if I had a futures account, I'd be a buyer on a continuation breakout out of this resistance level. Give me a little bit of a breakout and then a retouch. I'm long. Russell 2000 futures. The Dow futures, wrong chart, Bob. There you go. All right, Dow futures, a little bit more bearish than the other two in that we have now engulfed a closing candlestick. I'm not sure why this is showing positive right now because we are now down relative to the lows of Friday. Very strange. Very, very strange. Let's go to a 1 minute chart. Yeah, there's your gap up higher. And for whatever reason, I don't think this is accurate. But doing a pullback, 5 minute view, we're in declining wedge formation. I think this gets resolved to the upside, if I had to hazard a guess. Now, going on over to the E-minis. Did we go over the E-minis already? No, we did the NASDAQ, Russell, Dow. We are now in the fifth. We're now in the second candlestick of the open on a 5 minute chart. And you can see buyers are beginning to step in here. 1 minute view, we have a breakout out of a 1 minute candlestick. So it looks as though they're going to try to take this up higher. E-minis up just shy of a quarter basis point. Taking a look at the US dollar. Now, the dollar had a very strong back half of the week, but it still broke down on the week last week. We saw a little bit of a bottoming tail, but net, it broke weekly support. And this rally on Friday set the stage for a correction in silver, gold, the mining stocks. So dollar at current is up relative to Friday's close. Moving on over to, let's begin with Bitcoin. Bitcoin is up, coming off the session highs. Gold trying to rally back here. We have an options position. We are short premium on gold. We're not short of gold. We are short premium, meaning we sold option premium for cash flow. So it's pulled back. We're positive on this trade. And they're trying to recapture this support level here. We'll see whether or not they close it above. And this will be the next price target. At around 2018.50 the ounce. Taking a look at light sweet crude. I thought I had it up here. Apparently, I do not. Light sweet crude flat on the session. Initially, they tried to rally it. It got sold into. They're going to try to spike it back. I think oil is going up higher. Now, what's strange here is despite the rally in oil of late, home heating oil has been declining. Weekly view. This is good for me. So the minute we break out, I call my oil company. Come fill me up. But right now we're in a downtrend channel, so I'm going to drain that tank as long as I can before I go empty. Let's stick with the commodity trade here a little bit. Cattle the prior week had that's not what I wanted. Come on. Here we go. Cattle weekly view. Oh. Weekly view. Outside reversal bar the week prior to last week. It's an up week, an inside bar. Stubborn. There should have been a follow through to the downside. It didn't happen. So this is still strong price action despite this outside reversal bar on cattle. So I would not short cattle until such time as we break this lower band of support. The bull trend is still up. Moving on to, let's go to gasoline prices. Gasoline prices rose about 6% last week, something like that. Very strong price action. And I want to pause here. I want to talk a little bit about, this chart. Not everyone in the United States heats their home with home heating oil. Most is from natural gas or other distillates. But when you take a look at crude oil prices breaking out, you take a look at gasoline prices moving up higher, you take a look at the Bloomberg commodity index trying to break out here. This is inflation. You don't need to wait for the Federal Reserve to say whether or not, or the Bureau of Labor and Statistics, to tell us whether or not there is inflation. This is inflation. This is why we review these charts every single Sunday. Taking a look at agriculture. Actually, I skipped silver. Silver, strong week last week, a little bit of sell at the close. Now we have an opening inside the wick. That is very bullish when you get that. So I think that silver continues up higher here. Moving on to agriculture. Agriculture, again, this is inflation. Last week, an outside reversal bar. Remember, the week prior to last, we had a breakdown below the rising band of support. There should have been a continuation move lower. Were there a lot of sellers out there? There were none. Buyers stepped in. They bought the dip. Now they're going to take it up higher. This is a very bullish chart for corn. Soybeans struggling to break out here. They had broken out. They're let's just say they're trading at support. Wheat prices, they've been stuck in a trading wheat range for several weeks now. I think that this gets resolved to the upside on wheat. And to that end, I may just buy call options on wheat. I would trade with WEAT. This is an ETF. The options aren't all that cheap. I would like to have gotten them down in the teens. I'm looking at current IV percentile at 29%. They're okay. They're retail. I don't like to pay retail for options. So I would like to have seen this down in the single digits to the teens. Given the lack of volatility, I thought we would have had that, but not quite yet. So I'll keep an eye on the trade. Maybe we'll do it. Maybe we won't. Maybe we'll sell or buy a call spread, buy a deep in the money call, simultaneously sell a deep out of the money call to help finance the trade. That's wheat. More to come on that one. Back to ag. Are we all done with ag? I think we're all done with ag. Let's circle back to equities for a moment. We have the NASDAQ 100. It's giving back a little bit of real estate here. 1 minute chart. We have volatility. I know my head's in the way. Let's bring up /VX on the big screen. So volatility is basing here. Let's go to a 15-minute chart. Volatility is basing. Here's your upper band of resistance. Now, keep in mind that we closed the week out at, I believe, 52-week lows on volatility. If we didn't close at them, we're very close to the lows. So as the saying goes, when the VIX is low, you got to go. When the VIX is high, you got to buy. Does that mean you go selling your equities tomorrow? No. I still think there's more fuel left in the tank for equities to move up higher. It just means reevaluate where your stops are, what's your exit strategy, because when things get wonky and all of a sudden you're seeing VIX spike up to new higher daily highs, maybe you want to take some money off the table, consider putting on a short trade. Let's go to comments. Randy, hello, sir. TZ Burton, hello. Mr. Pete, welcome, Pete. The great Yoga Mac, happy trading to you, sir. Bonnie Bean, welcome. OR, I have my pad and pen at the ready. I have your symbol. Sean, hello, sir. It seems 2,000 ounce is fighting zone for gold. Yeah, it's now support. I mean, it's clearly a battleground. I think that you have the imagery, the verbiage correct. You don't want to see it close back down below 2,000. I don't think it's going to be all that hard to see gold making new all-time highs in 2023. TZ Burton Bob from Thursday's show, George Gem talked to Robert Breedlove on 323. He had some information on cold crypto. Oh, thank you. On 320. Oh, 32. Robert, I'm definitely in the market for cold storage, which you're aware of. So I appreciate the direction you're giving me here. TF Hatter, hello. Yes, please hit the like button, folks. If you could do that, I really appreciate it. Helps me out with that YouTube algorithm. I don't think they like me very much. VIX is at absurd levels right now. Agreed. And I'll go to a more detailed reason of as to why in a moment. ASM is the best silver with PE 19, insider buying at 95. Good info. TSLA. Tesla comes out with earnings this week. So whatever analysis I do tonight, folks, please put it in the context that we have earnings coming up on most, if not all, of these symbols. So whatever I'm looking at, I'm saying is bullish. Keep in mind, I don't know when earnings are. I know Tesla comes out on Wednesday, I believe. So we have a position on Tesla right now. I'm taking it off before earnings, reestablishing for an earnings trade, probably a 2.5, 3 standard deviation trade, just so I stay out of the fray. ECC. Okay. Denny, hello, sir. Okay. All right. Economic data coming out this week. There's not going to be much. We're in earnings season, aka silly season. So expected the headlines to be riddled with news about headlines, not so much about economic data. We have Empire State Manufacturing coming out tomorrow, home builder confidence. Tuesday, housing starts, building permits, forward-looking guidance, a forward-looking indicator, building permits. Fed's beige book on Wednesday. Thursday, initial jobless claims. We get that each week. We got a bunch of Fed heads coming out on Thursday for whatever reason. Friday, we get S&P U.S. Services PMI. Any read above 50 is a sign of expansion. Any read below is a sign of contraction. They're expecting expansion at 51.5. Also on Friday, we're getting a U.S. manufacturing PMI, which has been in contraction for a long while now. They're expecting continued contraction at a 49 handle. And again, we got another Fed head out there. Lisa Cook, never heard of her. I don't know if she's a voting member. So take that into consideration. Earnings coming out this week. Not much going on tomorrow. In the AM, we're going to get Charles Schwab. That's going to be interesting only for the fact that they've been under a lot of pressure, a lot of scrutiny with regard to the quality of their book. So keep an eye on that earnings report. That could set the stage for the regional banks that are coming out. Tuesday, more big bank data coming out. You got Goldman Sachs, Bank of America, J&J. That's not a real trade for us. Now, after the close on Tuesday, this is when things start ramping up. We're going to get Netflix coming out, always a volatile earnings report, with the exception of last quarter, which I didn't trade. I would have made money on that one, but I didn't trade it because I got burned on the 2 prior quarters. So they had the reaction on the 2 prior quarters had a probability each of 4% probability of happened 2 consecutive quarters. Beware when you're trading earnings on these names. Stay small. It's really your only defense other than getting out of not going into the trade. Wednesday, MS, we get Morgan Stanley in the morning. Really the only name worth mentioning. Tesla after the close, along with IBM. Before the close open on Thursday, we get Taiwan Semi, Amex coming out. I won't be trading either of those. Taiwan Semi does not have enough premium in the options. We get not much for the rest of the week. P&G on Friday. Not much really going on there. Moving on to, okay, so, the purpose of me being here is to give you my opinion of where I think equities are going. I'm not always short the market. In fact, on Thursday, I said I'm probably going to take a haircut on a short position that we had on. I bought a put spread, and it appeared as though that was not going to go my way. And on the pullback on Friday, I closed out the position. I took a lot less of a loss than I thought I was going to. So, first out, best out. The market gave us an opportunity to exit early on in the day. It looked as though we were breaking down, but volume was very light. Always watch the volume. That means that one algo can rip the market up higher, which it did. So, as we saw buyers move in, what do we do? Closed out that short position. I was actually profitable on it in the morning. I stuck with it to see how we may close out the day. Had we closed the Qs down below support, I would have leaned into the short. It did not. It rallied back. Therefore, first out, best out. We took a loss, and I'm proud to say it was a small loss. We live to play another day. Stocks move up higher. I'll reshort on a better risk-reward entry point. That being said, the stage is being set for a pretty aggressive sell-off if they do move this market up higher. This is a timeline going back to February of 2022 of Q1 estimates over time. Look at the decline in Q1 earnings over the course of the past year and a half. So what we're seeing is a lot of headlines coming out. The banks are beating on their EPS. Who cares? Who cares? I don't care. What I care about is how do they do year over year, quarter over quarter. They don't want to talk about that. So when you're looking at CNBC, they're going to the narrative, the hyperbole is going to be this week Tesla beats expectations. So what? How are year over year sales? That's probably a bad example. IBM probably a better example of a year over year comparison you want to use. How are they doing year over year? So they don't want to talk about that. They want to rah-rah the market up higher. They're cheerleaders. They are not journalists. So beware of what you're watching on CNBC. To give you another visual of how S&P real earnings growth is, here's how we're looking. This is an upside down V. This is a crash. No doubt about it. But the problem is this, is that when you take a look at this chart relative to the Shiller PE ratio, while we were overvalued, the second most overvalued since the 2000 dot-com crash, we're not that far off the highs. We're just shy of a 30 handle on the Shiller PE ratio, where the mean is 17.02. We are still very far extended beyond historical norms. They're not paying attention to this. They're ignoring this. The Buffett indicator shows as being overvalued. It's a bit misleading. We are currently 29.10% extended beyond historical trend. This stock market is very extended and very expensive. How expensive are we? So here's the S&P 500 monthly chart, just to give you a picture, right? So we want to take a look at this again. Here is the stock market. Here are earnings. This is what's supposed to propel the stock market higher. The problem is that earnings guidance is declining. Real earnings growth is declining. Yet the S&P 500 is where? We are now just 13.43% below the all-time highs on the S&P 500. It gets better. You want to take a look at the Qs? The Qs from their all-time high to present, down 23.79. Well off of the lows that we saw only back in, was this October? Yeah, October. we have rallied 24.42%, despite the fact that, again, real earnings growth is crashing. It's all about the Fed. Speaking of the Fed, speaking of the Treasury, speaking of de-dollarization, here she is, good old Janet.
You're going to drive the debt from somewhere around $32 trillion up to about $50 trillion, correct?
Yes, but what I believe is the single most important metric for judging the fiscal stance of the country is real net interest as a share of GDP.
Okay.
We have
so are you
a
concerned
large
when you're taking the
GDP.
debt from $32 to $50 trillion? Are you concerned who's going to buy that debt? And also, at what rate they'll expect to be compensated for buying riskier and riskier
Listen
debt?
to this.
Are you concerned about that?
Well, if the real net interest cost of the debt remains low relative to GDP, and we're on a sustainable fiscal.
Well, we're not on a sustainable path.
That is your Federal Reserve Secretary in action. It's all hopium. They are pumping more and more debt into the system on the hope that interest rates stay low and that we get some sort of GDP. But remember, we are a services economy. And as I mentioned earlier, on Friday of this coming week, we're going to get services economy. It's just barely in expansion territory, and manufacturing has been in a contraction for months now. So she is absolutely, when it comes down to the ability of the United States to afford these continued deficits. We have the debt ceiling debate coming up in June. I suspect that that's going to cause a lot of fireworks for the equity markets when that debate starts getting ramped up. Because remember, the Republicans own the House of Representatives right now, and they're going to want some concessions. Now let's talk, now that we've seen or heard from our esteemed Treasury Secretary, what if the dollar falls? I'm going to skip over a lot of this stuff because anything about Brazil, the new currency, this is going to take years and years to roll out. So I'm not going to go down that road of saying that the dollar is going to crash. It's not going to be the reserve currency effective tomorrow. Did the Biden administration probably kill the dollar longer term? Yeah, because they weaponized the SWIFT system. Yeah, they probably did. But it's going to take a long time for the United States dollar to get dethroned. What are the stages of de-dollarization? For starters, foreigners don't need as many dollars. Why? Other currencies, whether they be crypto, CBDCs, and whatnot, can fill the void. This makes the price of the dollar fall. It gets weaker. It's usually slow at first, then picks up speed. It keeps going, a progressive rush for exits. We're not there yet. We have a drip environment where the dollar continues to sell off each week. This is because the first ones out only lose a bit, but the longer they waited, the more they'll lose. True, because the buying power of those dollars gets reduced. So you're seeing gold rally right now. Now is the time to take those expensive, worthless dollars and buy gold and silver. Consult your investment advisor. Who's left holding the bag as the dollar becomes increasingly worthless? Easy. Americans. The only people on earth who are actually obligated to use the U.S. dollar, thanks to an obscure law passed in 1862 as a wartime emergency that nevertheless managed to stick around for 151 years. So, folks, all we have right now, you have no choice unless you've swapped your dollars for gold, Bitcoin, goats, whatever. You're seeing the Bloomberg Commodity Index rally. I went over this in great detail on Thursday night. Go back and check out Thursday night's live stream. If you weren't around, you got to become your own central bank. How do you do that? You got to get out of the U.S. dollar system. How do you do that? Silver, gold, Bitcoin. Buy buy some oil. As long as it can't be seized, buy something that's tangible. That if you drop it on your foot, it hurts. Then you buy seeds. That's probably going to be the next currency. So get out of the U.S. dollar now. It's still expensive. It's going to get cheaper, and you want to use the buying power that it provides right here, right now. The main event. Here's the big deal, right? As you see more and more tyrannical policies here in the United States go into effect, especially when the CBDC hits, the central bank digital dollar, and Fed now is coming in June. That's when you're going to start to see capital flows out of the United States. That's because nobody trusts us. If foreigners get nervous, they sell not only dollars, they sell assets denominated in dollars, starting with the most liquid: stocks, bonds, treasuries. These are easy to trade. IBM stock is easier to sell than a Taiwanese factory in Wisconsin. About 40% of American stocks are owned by foreigners. Think about it. Think about it. If they all rush for the exit, even a percentage of them rush for the exit at any one given time, this equity market is a house of cards. And about 1/3 are owned by corporate bonds. If foreigners start fleeing, both plunge. This could cut your 401k almost in half, and it could drive up borrowing costs for companies to impossible levels. I don't believe that your 401k is going to get cut in half automatically. That assumes that every single foreigner exits stage right automatically. I don't think that's the case. However, the borrowing cost issue is going to become a problem. And what else is going to become a problem is this. When you had the days where you had companies doing buybacks, they did it by borrowing at zero and buying back their own stock. What happens when borrowing costs get too high and they say, you know what, let's sell some stock. Let's offer it up. Free money. It'll dilute their share price, but that's another alternative. Go back, look at Apple, look at all these companies that did so many share buybacks. They got a lot of stock, and they may have to dump some onto the market if borrowing costs go too high. So the ensuing problem would be mass bankruptcies. Conclusion: there are ways to stop this, but the Washington clown show to raise the debt ceiling, I mentioned this earlier, paired with their obsession with sanctions that scare foreign countries off the U.S. dollar, Washington isn't remotely close to the serious thinking it will take to right this ship. Folks, we have U.S. troops in the Ukraine illegally. Think about it. And you don't hear any Republicans barking about it at all. Okay, let's go to some comments. SpaceX launch tonight. Cool. All right. I put a link to. Thank you very much, TZ. Appreciate that. Keep SQQ 15% regard. I have some SQQQ common shares. I got rid of the option position I put on. I bought Boyle near the end. Yeah, I took a look at Boyle over the weekend. It's looking actually pretty good. Okay. Will the Fed speakers try to talk the market down this week? You never know their agenda. You really don't. They have an agenda. It changes from week to week. I don't know, to answer your question. I try to avoid that. They could take parking space up in your head, and I just look for what the price action is in the market. That's it. And you had one of the Fed heads that came out the other day talking about how he was hawkish. Equities fell, and all of a sudden they rallied back again. So you know what? These are one-day wonders, not even one-day wonders, 1-hour wonders. So I wouldn't get too wrapped up in what they have to say. Watch what they do. And the Federal Reserve's balance sheet is declining again for now the third straight week. Coach, how about trade dollars for? Yeah, no doubt about it. Yeah, Calmaine. I think they closed at $57. Last I looked. NY Jets, when the markets tank, Won't everyone still rally to the dollar? Not always. We had, there have been a couple of corrections where you saw a flight out of equities and the beneficiary was not the US dollar. So usually, to your point, yes, money would go from equities into US money markets. Money markets need US dollars, and you'd see dollars pump up higher. But they can go into equities, they can go into foreign stock, excuse me, they can go into bonds, treasuries, they can go into foreign assets, they can go into gold, whatever they perceive to be safe haven plays. So it's not always the case. Amazon's P is negative. Not quite sure. Not quite sure. Tom Lu, no fizzle. Yeah, you need real gold and silver. Like I do own paper silver as a trade, but it's just a trade. I own physical assets. Own real estate free and clear. If the World Economic Forum is going to own everything, it's going to cost them a lot of money to buy properties. Good point. You're welcome, NY Jets. All right, let's move on. Let's talk about the headline topic of the evening. And this is how it's going to play out one day, folks. You're gonna shut down your computer on a Sunday, a Friday afternoon, and on Sunday night we're going to be talking about why the banks won't open the next day, or an announcement has been made about the transition from the United States from a cash-based system to a CBDC system, and they need to get rid of cash. They have to get rid of it. The way they're going to promote it is that it's safe and efficient. It's for your own security. It's going to have safety features on it, so your security, your privacy is secure. That's a play on words. Your privacy is secure, perhaps from hackers. It's not secure from the government, and they will weaponize it, just like Trudeau did up in Canada with the truckers. Even though they didn't have CBDCs, they still seized their crypto. That's why I want a cold wallet. And they seized their bank accounts. Lord knows if they ever got them back again. So have no doubt they will weaponize these programmable dollars. And the other reason why we do not want them is that if the Federal Reserve doesn't want to cut interest rates, what they could say is, listen, we need to stimulate growth here. What we're going to do is we're going to put an expiration date on your cash. You don't spend 10% of your cash within 1 month. Well, you lose it. You get taxed. So spend it or lose it. That's the sickness behind the CBDCs. It's even a greater attack on savers than what negative interest rates was on savers. So just when you didn't think it could get worse, it's getting worse. So let's introduce first the International Monetary Fund. Who is the International Monetary Fund? Just some facts here. Established in 1944, post-World War II, to help lend to countries. Initially, it was 44 countries. Now it's pretty much every country in the world is a member country of the IMF. What's really important is that they have 150 nationalities on staff. So they may not be competent, but they're certainly diverse. They have about $1 trillion in lending facilities, 34 current lending arrangements, mostly to Africa, to the emerging markets, 76 recipient countries of emergency pandemic relief, blah, 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 blah. So that's the IMF. They're a global bank. So during their recent spring meeting in Washington, D.C. only days ago, they announced the launch of Unicoin, a global legal tender. I think I read it as unicorn. I did that. I got to correct that. Unicoin, a global legal tender settlement, CBDC unveiled at Spring IMF. Now, George Gammon, who was mentioned here earlier, did a video about this the other day. He played a video from the IMF website. That video it's like a explainer video about the Unicoin, and it's gone. I can't find it. I spent an hour before the show trying to find it. It's gone. I did find an image with a play button on it. That was the image that you would use to click on. That's still there, but the video is gone. It's really a dystopian video about how it's going to be safe, secure, and whatnot. Check out George Gammon's video, I believe from Friday, and you can see it there. It's one of his most recent videos, so please check it out. So they launched it on their during their recent meeting. There's only one problem. You can't find it anywhere on their agenda. I've been looking for quite a while. This is their agenda, and I can't find anything about Unicoin, about, I'm going to go through this slowly. If somebody else picks it up, or the launch of the International Monetary Unit. Nothing. I have done searches, can't find it. You got plenty about climate change. They love their climate change. I'm going to check this out later. The Bretton Woods Committee, I want to hear about that. Bretton Woods has basically made the United States dollar the world's reserve currency. What are they talking about there? And, oh, what is this? IMF approach to central bank digital currency capacity. What is this? Ah. I don't think that this is. It's not the explainer video. All these lizard people. All people. Yeah. I'll share this out if you ever want to listen to it. But this is not the announcement. You can't find anything about Unicoin. At least they make it not searchable. It could be embedded in one of these links, but it's not searchable. This is all third world stuff. So basically what this is, let's get to it because I'm killing time here. IMF unveils the new global currency known as Universal Monetary Unit to transform the world economy. So there are a couple of truisms here. To send money domestically is very easy, seamless, in fact, very cheap, very seamless. To send money from one bank in the United States to another bank over in Africa, I try to pay my developers in the Ukraine, absolute nightmare paying them, very, very expensive to do. And so this system actually makes it a lot cheaper, a lot faster to execute these trades. I won't go into the wonkiness of how difficult or why it's so difficult, but you need multiple institutions, perhaps a central bank as an intermediary or another network bank that acts as an intermediary. Everybody collects a fee. Everybody collects a fee, making it very expensive. This makes it very, very cheap and very, very fast to send money from United States to Uganda. Very cheap, very efficient. It's also very secure. It's encrypted, ledger type system, and there's only one problem that they don't want to talk about, is that your privacy is gone if you use this system. So let's scroll through it. A new global currency was launched. About 99% of the global population has no idea it just happened. The press release says the organization consists of sovereign states, central banks, commercial and retail banks, and other institutions. This is the press release. Nobody knows who owns this system. The IMF did not create this system. They're adopting it. They're launching it. They do not own it. Who wants to bet that you have the World Economic Forum behind the show? Where did I go? I hate when they do that. Okay, let's go back. I had this all highlighted. It's all gone. So basically, this is the new monetary unit. And what this is going to be, my take is on this is that this is going to be the central bank in the future of all the CBDCs that each country uses. So it's going to be the central bank of the world. And the digital dollar is going to connect to this monetary authority. And not only will the central bank of the United States, Congress, anybody who wants to take a look at what you're spending and manage it, it's also going to be global. They're going to be able to have access to your data and tell you what to do. This is where it's all going. And this is the final straw that breaks the camel's back in terms of our freedom here in the United States. There are certain congressmen out there that are out there trying to fight this. DeSantis is vowing to veto it. It's going to take a lot more people to fight back on this. So get vocal, contact your congressman, your senator, let them know we see you. If you are voting for this, you are voting against me. They need to change that to adopt the central bank digital dollar. That requires you to have an account with the Federal Reserve. At current, it is illegal for an individual to have an account at the Federal Reserve. Only banks, I don't know what else. I'm not that educated on it. Probably just banks and other authorized non-retail outlets, financial outlets. Maybe insurance companies have access to the Federal Reserve. I don't know. But certainly the individual is prohibited from having an account with the Federal Reserve. That takes an act of Congress to do that. The president can't just wave a veto pen. They need to change the law. So for them to do this legally, this transition, your congressman's got to vote yes. If they do that, you got to let them know. If that vote comes up, let them know we're watching you. Vote no. Vote no. Or else you wake up one day and the US dollar is gone. They're telling you to turn in your cash, probably telling you to turn in your gold, and lucky you, you're going to get some worthless piece of digital NFT for the most part. So prepare, folks. Prepare. Let's do some chart requests. ISO 22 is the global finance language. New development bank started in 2008. Yeah. Yeah, interesting. Okay. Let's talk a little bit about, oh, by the way, I was looking at ExxonMobil. I did a scan earlier today of one of my favorite scans here. And it's a 6-week rolling candlestick, weekly chart. And ExxonMobil popped up. So this is looking really good going into the new trading week. Joe is on here too. So ExxonMobil, Joe's a real estate company, a landowner down in Florida. They're struggling for a comeback here. Six Flags, not much going on there. But this is a really good scan. So if you join TrendSpider, use the discount code below, and you can get this this scan, which is very powerful. If I find a lot of good long-term, potentially good shades, like this one here, FANG, weekly chart. It's now trading above all these moving averages and VWAP. This is Diamondback Energy, and it looks as though it's going to go higher. Now, what I like to do here is take a look at the options. To see how cheap they are or expensive. Oh, the options are dirt cheap here. So this is an opportunity to get long of FANG using options, very, very cheap options at that. You can see we broke out. We have another resistance level above. So I'm going to create an alert here. And if and when we do break out, I'm probably going to put on a very long-term trade because I'm bullish on oil. And I want to buy a name that has very cheap options that we could put a pretty sizable trade on to the long side. Just a little reminder to myself. And we're good to go. Jody Schwab. Just keep in mind, Jody, tomorrow is earnings for Schwab. We'll go over that in the AM, but we can take a look at how the price action has been of late. I know the premium has come in on the options. Did you say Boyle? Yeah, Boyle was looking pretty good. Let's go over that. So again, folks, TrendSpider automated technical analysis. Use the discount code below. And get a 35% discount code. All right. Oil. So Boyle, we have a rule. It's not a rule that I invented, of course, but we have a rule. We don't want to get long of anything until it stops going down. And you can see that Boyle has kind of stopped going down. We've been consolidating here for some weeks now. So let's take our crayon out. Let's identify first exactly where we want to stop out. Right there, 307 per share. Close down below that mark would have us out of any trade. Now, what did we do last week? Well, we broke out. So it's game on. I wouldn't be aggressively long here, but it's looking pretty good. You still had some big down volume, but let's drill down to a daily chart to see how we closed out the week and what kind of volume we had. And you could see on Friday some really good volume. They broke this out, retraced back down to support, and then buyers stepped in on volume on Boyle, bullish on Boyle. Let's take a look at how it closed on Friday. It closed at resistance. So the shot here is this, is that I would be a buyer on a breakout. Now, unlike 3 months ago, the options are pretty cheap now. So I would probably go with a call spread on Boyle, a long call spread. Another way to play this, because this is extremely volatile, excuse me, is on a retrace. Horrible line. I should be ashamed. Is on a retrace back down to support. I have a typo up there. I'm aware of it, but I'm not going to change it for the sake of time. Touch, bounce, breakthrough, done. Jody, I'm going to share this out with you. I know that you're very much into, as a matter of fact, what I'm going to do, I don't know if I could do it or not, but I'm going to try to overlay. Yeah, I can on here. Just be aware that you have the 9-day moving average, which is immediately above. So right where we have that breakout point, on a 30-minute chart. You also overlaid on this 30-minute chart. I just overlaid the moving averages of the daily chart on top, just to show you where you have resistance above. So wait for the breakout here or a retrace back down to support, one of the two, or both. Nibble on a pullback, add more aggressively on the breakout. Boyle seems to be very interesting. Schwab after earnings. It depends upon earnings, right? Schwab has got a lot of dark clouds over it right now. So you're welcome, Jody, anytime. So I'm going to be interested in Schwab. I have an account with them, so I'm going to be really interested in them. Their forward-looking guidance is going to be very, very important. Not so much the earnings. I would watch their deposit withdrawals. Let's take a look at Tesla. Oh, let's go with Schwab. Let's stick with Schwab. I'm actually working backward tonight. SCHW. There we go. Pull back, higher level view, weekly view. I think it's looking interesting here, but you do have some resistance above. I mean, if they, again, this is a weekly chart. So an overlaid in dashed line, I have monthly resistance above. So right at 57.50 per share is a lot of resistance immediately above. If they gap it up above 57.50 post earnings and they manage to close it there, I would be a buyer. Or another way to look at it is like this. Take your crayon out, draw your resistance level, create an alert. If you want to nibble on a breakout. And we're good to go. Now, if they break support here at 48.63, we're going a lot lower. So I would be very, very careful with this name. Listen to the forward-looking guidance, and I would just listen to the forward-looking guidance, okay? Daily view. Daily view, we broke out here on the 12th. Retest 1, retest 2. The chart's looking okay. You know, if earnings weren't coming up, I would be a lot more constructive on the name. But with earnings in front of us, I need to be very, very cautious. So, and remember, the knee-jerk reactions to earnings is generally the wrong reaction. So if you're thinking about buying the pre-market, be careful. It's best to take a look. What professional traders do is they document during normal hours trade, what was the high and the low of the session? If it breaks the pre-market session, if it breaks the pre-market session low and puts in lower lows, they go short, and you have an avalanche of sellers coming in because they all do the same thing. They're momentum trading to the short side. Vice versa holds true as well. They document what was resistance in the pre-market, what was the closing high of the pre-market, and that if it breaks out and above that, you're going to see an avalanche of buyers coming in, momentum trading, Schwab up higher. So don't buy these names in the pre-market. It's not for the little guy. Please be careful unless you really know what you're doing. Please. Tesla. Clean this up a little bit. You can see how much I trade Tesla. A lot. Okay. So weekly view of Tesla. It's struggling here. It's struggling. The upside is that they've had what, 3 now rounds of price cuts, maybe 4, and the shares have held in there. We do have a lot of resistance up at this moving average here. This is a monthly moving average. 9-period monthly moving average. At currently, that moving average is at 207 per share and flat. Now, to the bull side, I use these drawings way too much just to get rid of them. So that's a bad line. Remove that one. We are putting in, I'll get this right eventually, guys. We are putting in higher lows, right? I actually should have drawn this lower band here. The problem is that we have a lot of resistance above. I would not be a buyer. I don't like when people say buy this stock into earnings. They have no idea what earnings is going to be. And that's just, I see Guy Adami, who I happen to like. He does that all the time. It drives me crazy. Daily chart, good volume last week, by the way. Now, on a daily chart, you have a lot of resistance above. So I would not be a buyer of Tesla. How would I trade earnings? I probably won't. Because when you take a look at Tesla, if you're going to be a premium seller, you want expensive options. I have an options position already on Tesla, and they sucked a bunch of volatility out of those options, which is great for me as an option seller on Friday. It was a great day, but I was in shock. They should be pumping premium into those options, into earnings. They're taking it out. So if anything, what I may do is I may put on a long straddle. So what's a straddle? So a straddle, you only want to do a long straddle when the options are cheap, right? So right now the options are pretty cheap. So the shares closed at 160.27 per share. So let's say I bought a 160 put and I bought a 160 call. That's a neutral bet. So if you get a big move, like the expected move on Tesla is $12.25. That's the market makers. They're expecting a $12.25 on earnings. So what if they move 20, 25 bucks? That long straddle becomes very, very profitable. If it stays within that expected range, you're probably going to lose all your money. So that's the bet I would put on. I would stay very small, just speculative, but I wouldn't sell premium here. You're not getting paid for the risk. So Tesla, a lot of resistance above. I could honestly see Tesla breaking. I'm more bearish on Tesla than I am bullish. To me, Tesla's it's like a cat with 9 lives, and they've eaten up a lot of them. They're very expensive. ECC, Ecoin Credit. I do not know this company, but the word credit automatically gets me nervous. It broke down last week. It's probably going to rally back in an effort to try to recapture, let's call it 11 and a quarter per share. It's probably a short at that level. And I would add to that short on a break to new weekly lower lows. So ECC appears to be actually, this is a daily chart, wrong chart. My bad. Do not short this stock. All right. So this changes things here. I would not be a buyer. You're in a wedge formation, nothing going on here. You had a breakdown on a daily chart. It's in no man's land. I wouldn't be a buyer until it recaptured 1129. I would not short this stock. I thought I was looking at a weekly chart before. This is a daily chart, so no shorting ECC. But I wouldn't be a buyer either. EA, Electronic Arts. Sorry, guys, I need another drink of water here. Electronic Arts. Is it an uptrend? First off, let me get back to the weekly chart. I don't know why I'm doing that tonight. I never do that. We have a breakout. You can see the algorithm picked off the early stages of breakout number 1, then breakout number 2. Last week was breakout number 3. What I'd be doing here, I'd create an alert at this breakout point. Keep a little bit of sensitivity on. Isn't Microsoft trying to buy this company? Was that stalled by the government? I know I have a typo there. Okay. Bob, me and you are in the same position with Tesla. Oh, you're oh yeah, with the so you realize the premium coming out. You short premium? I've been collecting. Good for you. Yeah, we have we rolled down calls. We made a good amount of money on Tesla. But now that the premiums are coming out, it's really paying off. But I'm going to be out by earnings. Hoping to see it open up on Monday. It could. Tim, you are welcome. All right, so EA, that's what I would do here. I look for a pullback, and that pullback would actually coincide with the 21 period monthly moving average, which is now rising. Bullish on EA. Down day on Friday, Doji Star formation. We're a little bit long in the tooth here on the stochastics. This is due for a pullback. I wouldn't be the least bit surprised to get that pullback to support. I'd be a buyer at that price point. And that's it, folks. Folks, thanks for being here. Like, subscribe. You know the deal. Have a profitable trading day. Thank you for being here. And don't forget, TrendSpider, 35% discount code below. I give it away free to our silver and gold level members. And what else? Oh, 30-minute chart club. We met on Saturday. The video is on. The replay is on YouTube. If you're not on our email list for that private live stream, link below. It's free. Also, you can get link below are my top five favorite candlestick patterns, free of charge. Everybody have an awesome night and a profitable trading week. Be well.